In this module, we are going to see the difference between national income and national disposable income. National disposable income is defined as the maximum the country can afford to spend on consumption goods or services during an accounting year without having to finance its expenditure by disposing of assets or by increasing its liabilities. Increasing liabilities means if the expenditure is more than income, the country has to borrow. So, disposable income is defined as the maximum the country can afford to spend on consumption goods or services during an accounting year. It includes both factor income and transfer income. It is also known as net national disposable income. So, unlike national income, national disposable income includes both factor income and transfer income. National income includes only factor income. What is factor income? It is the income earned by the factors of production by rendering their production services to the production process. Which are the factors of production? Land, labor, capital and entrepreneurship. This we have seen in detail earlier. It is a bilateral concept and the factor income is rent, interest, wages and profit. So what about transfer income? It is an unearned income. It is unilateral. It is received without rendering any productive service. And example is old age pension, scholarship, unemployment allowance, etc. And there are two types of transfers, current and capital transfers. So national income does not include this transfer income. But disposable income includes both factor income and the transfer income. Disposable income can be expressed in both gross and net concept. Net national disposable income is equal to national income plus net indirect taxes plus net current transfers from abroad. Because national income does not include transfers. So, to national income, we have to add net current transfers from abroad. National income, that is NNP at factor cost, net national product at factor cost, does not include net indirect taxes. Net indirect taxes is a transfer income to government. So, national income does not include net indirect taxes. NNP at market price includes net indirect taxes, but the standard unit of national income, which is otherwise known as NNP at factor cost, when we say national income, it is NNP at factor cost. It does not include net indirect tax. So to that, to national income, we have to add net indirect taxes plus net current transfers from abroad. So, net indirect taxes is the transfer income of the government and is free, and the government is free to use it the way it likes. And current transfers from abroad, that is the difference between the transfers from abroad and transfers to abroad. So we have to keep in mind always the income from abroad is to be added, but income to abroad is outflow of money, outflow of capital. So net factor income from abroad and net factor income to abroad. Likewise, net current transfers from abroad and current transfers to abroad. The difference between the current transfers from abroad and to abroad gives us net current transfers. So, always the transfers to abroad is to be subtracted and transfers from abroad is to be added. So, net national disposable income is equal to national income plus net indirect taxes plus net current transfers from abroad. In order to make it gross, gross national disposable income, we have to add depreciation, because we know that net plus depreciation is equal to gross. Gross minus depreciation is equal to net. National disposable income can also be calculated as national consumption expenditure plus national saving, or simply we say consumption plus saving, the income with the government to consume and save. So how is national disposable income different from national income? National income is the total value of the total output of a country. It includes all the final goods and services produced in a country in an accounting year. So, national income is the value of the total output of a country is equal to total income generated in a country is equal to total expenditure of the country. And it includes only factor income. But national disposable income includes both factor income and transfer income. And another major difference is that national income is always expressed at factor cost. But NDI, national disposable income, is always expressed at market price. That is national income at factor cost. It does not include net indirect tax. But national income, national disposable income at market price, it includes net indirect taxes. The complete theory part of national income is almost covered through the notes. Next, I am going to upload the calculations as online class, as video presentation. Thank you. Please subscribe and share.